Okay, so I want to talk today about modern banking and what banking really is. Actually, kind of the mechanics of it, because this is a little bit confusing for a lot of people. Banking, it's almost a bad word or a bad use of language to call it a bank, because I mean, once upon a time, and of course it's historical, because once upon a time, a bank was basically a goldsmith who made coins or did other works of gold. They often had the best vaults in town, so people often stored their gold coins with the goldsmith and paid a fee. And that was banking. The concept being that, you know, there was a reserve of some sort. I think when we use the word bank, we think of it that way. I've asked a few people recently, what do you think of when you think of the term bank? And everybody sort of alluded to the same thing, that it's a place that we store something. But is that true with modern banking? Well, I contend that it isn't. So let me explain. This is the mechanics of modern banking. So they say that we create money out of thin air. Well, in fact, we don't really create money out of thin air. We'll go into that later. There's another dialogue around, do we create money out of thin air? We sort of do, but again, the whole world of banking reform and monetary reform constantly repeats that mantra. That's another one I'm going to go into too, is this mantra of, do we create money out of thin air? They say we create money out of thin air. The banks create money out of thin air is the big mantra. They just keep repeating it as if it's some sort of conspiracy. Well, let me illustrate something here that suggests that it's not. Now, I'm not saying modern banking is perfect by any stretch. It's got a lot of problems, but I'm here to say that creating money out of thin air isn't one of them. And here's why. Because what banking really is an accounting system. Let me say that again. It's an accounting system. So here's what happens. You borrow money. Another misnomer. You don't borrow money. You go to a bank and they have permission to create credits in your account. So you go and you say, I want to buy this $1 million home. And so they place credits in your account and you pay for the home with those credits. So those credits get dispersed out to the home builder and to all the people involved in the production and building of the home. So everybody's debt is settled on that end. The only unsettled debt is between you and the bank now. The bank has acted as a fiduciary and paid the debt on your behalf. Well, they discharged it, of course, if you want to get into strict language. They discharged the debt on your behalf. Now, you owe the debt to the bank. So what happens when you make your first payment? Let's say your first payment is $2,000 on that mortgage. So you make that $2,000 payment. What happens to those currency units? Well, because of amortization, which is a separate subject and it's bank policy, due to amortization, the majority of what you pay on your first payment is interest. Correct. We all know that. So let's say that $1,980 of that first $2,000 payment, all but a 1%, is interest, which it probably would be something along that lines, and $20 is principal. So what happens in this transaction? Well, in fact, the $1,980 goes on the bank's balance sheet as their profit. Correct? What happens to the $20? And this is where the system falls down and doesn't correctly. Now, I'm sure there are people out there who know this, but they don't really get down to explaining the detail of it, as I've found. They sort of gloss over this. And what happens to the $20 in principal is it gets erased. It simply gets crossed off the ledger. Now you say, well, wait a minute here. The money comes into existence and goes out of existence? Of course. They're just ledger entries. If you were to write an IOU to a friend and the IOU was settled and you each had a copy of it, what would you do with the IOU at the end of the debt settlement? You'd tear it up, burn it, throw it away, cross it off the ledger, erase it, right? So what's so nefarious about that? Nothing. So this is how modern banking actually works. So you say, well, what's the point? Well, the point is, if we're going to look at something and dissect what's wrong with it, or try to correct its flaws, or try to, in our own world, if we're not trying to correct its flaws, we're trying to not make flaws on behalf of our interaction with that institution, we have to understand it and how it actually works. If you don't really understand the money flow or currency flow in your life and the mechanics of it, it's more difficult to make good choices that hold you in good stead going forward. So there's a little dispelling of the myth of modern banking and money created out of thin air. We'll talk more about the money created out of thin air thing, but that's kind of a synopsis of the mechanics of the flow of payments going through a banking system. Thanks for listening. See you soon.